Stock splits might seem like just a routine corporate maneuver, but if you're an SCHD investor, there's a lot more to it than meets the eye. Have you ever wondered what happens when a stock or an ETF suddenly becomes more affordable? That's often due to a stock split, and it's exactly what's happening with SCHD, the Schwab US Dividend Equity ETF. Recently, Schwab announced a 3-for-1 stock split for SCHD, meaning each share is being divided into 3. But don't worry, this split doesn't affect the value of your investment. Instead, it lowers the per share price, making it more accessible to investors. So why is this significant? First, let's look at what a stock split really is. In simpler terms, a stock split increases the number of shares, but reduces the price per share. For example, if SCHD is trading at $84 per share, after a 3-for-1 split, each share will cost about $28. But you'll now have 3 times the shares you had before, so the overall value of your investment stays the same. Now, why would SCHD choose to split? In a nutshell, making shares more affordable can attract more investors. This isn't just a routine decision, it's a strategic move, especially given SCHD's strong track record. So let's explore how this split might benefit SCHD's investors in ways you might not expect. Chapter 1. Benefit number 1. Increased affordability for investors. One of the biggest advantages of a stock split is that it makes shares more affordable. And that's exactly what SCHD's recent 3-for-1 split is doing. Before the split, each share was around $84. Now, after the split, that price has been reduced to about $28 per share. But here's the interesting part. The value of your overall investment hasn't changed. Only the price per share has been adjusted. Why does this matter? With a lower price per share, more people can afford to buy into SCHD. It opens the door for new investors who might have found the previous price a bit steep. Now, those who may have hesitated before can consider SCHD as part of their portfolio. This makes SCHD more accessible to everyday investors and not just big players. It's not just about getting in on the action though. Lower share prices often attract a higher trading volume, as people are more likely to buy and sell shares when they're cheaper. Increased trading can mean more liquidity, which makes SCHD a more flexible investment for everyone. Plus, when more people are able to invest, it can help SCHD grow. As the ETF becomes more popular, demand may rise, which can positively affect its performance. This aspect is particularly appealing for SCHD, as it holds a blend of strong dividend-paying companies. By making SCHD shares more affordable, this split helps democratize investing, allowing more people to participate without needing a big initial investment. So, for those considering SCHD, the reduced share price offers a fresh opportunity to join in and possibly benefit from the growth potential of this well-established ETF. Chapter 2. Benefit number 2. Enhanced liquidity and marketability. Another hidden perk of SCHD's stock split is improved liquidity, which basically means the shares are easier to buy and sell. Before the split at $84 per share, some investors might have hesitated to trade frequently due to the higher price. Now, with shares at around $28, the split encourages more trading activity, which boosts liquidity. Why is liquidity important? Simply put, when a stock or ETF is more liquid, it's easier for investors to enter or exit positions. In other words, it's more flexible. If you want to buy or sell your SCHD shares quickly, increased liquidity makes it much easier to do so without waiting for buyers or sellers to appear. Another benefit of enhanced liquidity is that it can attract larger institutional investors, who often prefer assets that are easier to trade. For example, institutions with strict guidelines around share prices or liquidity may now find SCHD a more attractive option. This can increase the ETF's marketability, potentially leading to more demand and even better performance over time. But it doesn't stop there. Stock splits can also impact investor perception. A lower per share price often seems more affordable. which can make SCHD look more attractive to a wider audience. As more retail investors join in, they contribute to a broader shareholder base, which can be a healthy sign for the ETF's growth. Chapter 3. Benefit number 3. Potential dividend adjustments. One of the key questions SCHD investors have about the stock split is how it might impact dividends. SCHD is known for its solid dividend yield, so it's natural to wonder if splitting shares will change what you receive in dividend payouts. The answer is both yes and no. Let's break it down. A stock split like SCHD's 3-for-1 doesn't alter the total dividend amount that the fund distributes overall. Instead, the dividend per share will be adjusted to match the new share count. So while each individual share's dividend will decrease proportionally, your total payout should remain the same as it was before the split. For example, if SCHD was paying 73 cents per share each quarter, after the split, it might be closer to 24 cents per share. But since you now have 3 times the shares, your overall dividend income remains steady. This adjustment can be beneficial for investors focused on income. With a lower per share dividend, you have more shares to reinvest if you choose to do so, potentially increasing your future dividend income as your share count grows over time. In the end, while the per share dividend might look different, your overall income from SCHD remains unchanged. For investors who appreciate dividend income, this split ensures you're still positioned to benefit from the same steady cash flow SCHD is known for. Chapter 4. Benefit number 4. Improved accessibility amidst fractional trading limitations. One unique aspect of SCHD's 3-for-1 stock split is how it improves accessibility, especially for investors who don't have access to fractional shares. While fractional trading has become more popular, not every brokerage offers it for ETFs like SCHD. So if you wanted to buy in at $84 per share before the split, you'd have to purchase whole shares, which might limit flexibility for some investors. Now, with a share price around $28, SCHD becomes more manageable for those who want to invest smaller amounts or who couldn't afford a full share previously. This is particularly helpful for investors who are just starting out or who want to diversify without committing large sums to a single ETF. By lowering the entry price, the split allows more people to buy full shares, even if their brokerage doesn't support fractional trading. This means that SCHD can now reach a broader audience, attracting not just seasoned investors, but also those new to the market or with smaller portfolios. The improved accessibility could increase SCHD's popularity and trading volume over time. When more people can participate in an investment, it broadens the investor base and can lead to greater overall demand. In a way, this split levels the playing field, making SCHD a more viable option for everyone, regardless of how much they have to invest upfront. Chapter 5. Benefit number 5. Long-term psychological and market perception. Stock splits are often seen as a sign of confidence from the company or fund management. When investors see a stock or ETF like SCHD announce a split, it can send a positive message that management believes in the fund's future growth. This perception can influence market sentiment, making the investment seem more appealing to a wider range of people. For SCHD specifically, this split reinforces its role as a stable and accessible dividend ETF. Many investors associate stock splits with optimism, which can create a psychological boost that drives up demand. After all, lower share prices can create the impression of a bargain, drawing more attention from retail investors looking for a strong, dividend-focused ETF to add to their portfolios. This perception can be powerful over the long term. As more people buy in, the increased interest can help support SCHD's value and trading activity. While a stock split alone doesn't improve a fund's fundamentals, the positive market sentiment it generates can be a catalyst for growth. For SCHD investors, this means the split could have lasting effects on how the fund is viewed and valued in the marketplace. In the end, SCHD's 3-for-1 split offers a fresh opportunity for investors to engage with this well-regarded dividend ETF. Whether you're a long-time holder or just starting to consider it, understanding these hidden benefits can help you make informed decisions. As with any investment, it's all about aligning your choices with your financial goals and risk tolerance. So keep these insights in mind as you explore SCHD's potential and consider whether this split aligns with your own path toward financial growth.